Hi everyone, it's Christopher from Serene Education with the 4 majors in this update for the 12th to the 17th of July 2015. Going to be starting with the Euro against US dollar, working our way through the 4 majors. So Euro against US dollar, let's have a look at the weekly to see how the prior week has gone. So hard right edge, let's have a look and see what's happened. And let's just pan in. So effectively what we've seen is price last week actually finding a bit of momentum to the upside on the 2-week support level here, and it's also a further 3, 4, 5, 6, 7-week support. So if you look at it, you can see that price has actually rebounded on a support level that was in play right through until late March or early May of 2015. So clearly the prior week's inverted hammer, we call this an inverted hammer candlestick, looks like an inverted hammer on a bearish candle. So this candle over here failing to make new lows, and subsequently that confirms we could actually have a change in market sentiment, i.e. in this case, because if it's an inverted hammer, it has to be on the bottom of a price support and resistance level, which clearly has been the 7-week low. And subsequently we saw positiveness for Euro last week, and rightly so. All that speculation that Greece actually hoping to put through a bailout plan proposal that actually not only the Greeks will approve, Greek Parliament that is, but also the ECB, the IMF, and the Eurozone group all happy with, and we saw price moving to the upside. So where does it leave us? Well, you can clearly see that we've seen consolidation. Okay, we've seen a pullback. So where to now? The overall bias is still one of consolidation. You can see that price has actually moved back within a consolidation that's actually been in place since the mid part or the latter part, sorry, of April of 2015. So clearly a consolidation, a range. Don't really want to be trading ranges, to be honest with you, because of the risk factor of it. Intraday you can clearly trade between those points, but obviously the risk goes up because of how shallow that range is. So there again, you can see the overall bias for this particular pair is still one of negativity. The overall candlesticks are still red. We do have a blue arrow. Having said that, so we should be looking for more bias to the upside. Having said that, prices failed to make a new high recently, and also subsequently not to failed to make a new low, to then continue with the long-term sentiment, which in this case is negative, to then reattempt the March low. So here, clearly, Eurozone, we have a lot happening this weekend in terms of the Greek proposal that's been put forward. It's been scrutinized now, and we could and we will hear tomorrow from they're having a Euro Economic Summit. Both the Euro Summit and the EU leaders are having a summit tomorrow to then inform us if they do agree with the Greek proposal, if it's a yay or a nay. And if then, we should see some movement. If it is a positive one, then we could see a slight move to the upside before we see a continuation to the downside. But either way, we do need to see some action before we can actually trade. So in this case of the overall bias is still one of negativity, and price has been moving sideways and failed to make any new lows. If she fails to continue to make new lows, then obviously prices are going to reattempt the prior highs that we've just come from, and we need to see a break above the current April resistance level high to see price then reattempting the 50-period moving average above here at roughly we're looking at 11835 and change before we see the institution moving average being a potential target long term for 2015 at 128824 and change. The other scenario would be if we see a bearish break out to the downside. The candlestick's already negative. We would just need to see a break of the current support level, the 7-week support, which would then put a red arrow back on the chart again, which would then drive price potentially back towards those March lows that we saw at the start of this year, around about the 104,388. So here clearly what we need to see is either one or two things. See positiveness, and we could look to then target the current resistance level highs to the upside, or vice versa, break of the support level here, and then to target aggressively that 10455 and change. So here again, look for those areas to give us a potential setup looking forward. And let's now move on to sterling. Where are you, sterling? Weekly. Here again, you can clearly see that over the last couple of weeks. In fact, we've seen a pullback, this bearish Harami formation here on the institution moving average. We saw a lot of positiveness for sterling over the last couple of months. Having said that, we've seen price pulling back aggressively recently, especially over the last 2 weeks. That's coming off the back end of this Harami, this bull candle into resistance, and then a bear candle, and this bear candle eating into way past the 50% midline of the bull candle in this case. So that clearly indicated that we should be looking for a potential further selling sentiment for the prior week, and we did get exactly that. And then last week we saw further selling opportunities, but as we headed into the end of last week, we saw more positiveness for sterling as we had some good figures coming out from manufacturing, particularly for the UK market, but also the bullishness has continued with also the Eurozone hopefully coming to the end of this whole debacle, and hopefully we'll have some sort of outcome. Let's have a look at this last candle quite closely. You can see that we had a lot of selling to start with, but by the end of that candle we closed high. And you look at this intermediate trend to the upside, you can clearly see that we've had support and price is actually moving at the level. But notice that price is actually trading between both the 50 and the 20 period moving average in this case. So clearly consolidation at this point. And if you look back along the time, you can see that the January level highs is where price is actually trading above right at this minute. So what I'm going to do is I'm going to go ahead and I'm going to apply both the monthly and the weekly pivot level on here. Starting with the monthly pivot, you can clearly see that the monthly pivot is still above price as we speak. And if you look along this level, you'll see that both prior resistance or consolidation support at the end of 2014 and then going into the 2015, you can see the pullback on January towards that 20 period moving average, which actually was the underside of that level here. So clearly a support and resistance level, a major support and resistance level at this point. We also have the 50 period moving average also coming through at the same level. So what we want to see now, if this is genuinely an intermediate trend up, we would need to see a bull candle moving to the upside. And ideally we need to see some positive data coming out in order to give us that bullish sentiment going forward for the remainder of next week. So we need to look at the fundamentals to see if there's anything out there that's going to clearly give us a bullish upside against the US dollar. So look for any sterling data. We have CPI year-on-year figures coming out on Tuesday. They expect no change there. Okay, so before it was 0.1%. They expect a no change at 0.1%. Then we're looking at average earnings index, 3-month year-on-year. That's a very important one. The average earnings index, a lot of people tend to look at because obviously we want to see that figure getting stronger and stronger. So this is a figure that excludes bonuses, is also released but not included for lack of significance. So it's a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer. So in this case, we want to see a higher figure because it tells us that there's obviously more money being spread around by the employers. And that's a good sign because those employers will then obviously go out and spend that money, etc., etc. So average earning, we saw 2.7%. They're expecting a forecast of 3.3. That's a major increase, guys. So if that comes out really around those levels or higher, look for real strength strength for sterling against any currencies. Claremont, the count change. The previous figure was negative 6.5. The forecast is for negative 9.3. So we would like that. So that there again is also going to be quite good, or a good reflection on sterling if those figures do come out. And do your diligence, guys. See if there's any major announcements out for certain pairs, and those particular ones really should factor for sterling. So we've got some positive data expected for this week. If we do get that, that would actually help build a positive candle on over here, and this could actually be a hammer formation on a intermediate support over here. So we could be looking then to target back towards that institution moving average, which is the current resistance level high that we saw at the start or the end of the 14th of June, Jan, Feb, March, April, May, June, July. So yeah, June level. And you're looking in excess of roughly 230 odd pips to those levels. So here again, very importantly, get above this monthly pivot. Ideally, we'd like to see price closing higher than that, the high of that candle. And you can see that this is Friday, Thursday, Wednesday, Tuesday, Monday. So the high see a candle closing higher than that Monday high level, for example, right up here, then we could see potentially the candles going positive. You can see on the daily that we've actually seen selling through the last 2 weeks, in fact, but a nice morning star formation on the daily. But ideally, we need to see prices trading above this level here at 156255 and change before we see a blue arrow. Candlesticks RMA, everything should be in favor, and then we could target back up towards these highs that we saw the evening star formation way up here at 15888 as a potential long-term target. On to the US dollar Swiss franc. This pair over here, not really one of my favorites. You can see very similar in its stature or makeup with the euro against US dollar. Euro against US dollar, we're seeing obviously a consolidation and a negative trend. Here we're seeing consolidation in a consolidation. It has been great. We've seen prices falling. US dollar been falling against the Swiss franc over the last couple of months. In fact, since March, we've seen prices falling over. But having said that, we've now gone to consolidation. Price over here through the end of May going to June, failed to see the lows that we saw in April being broken to then target the lows we had in January. That failed to materialize. We had a nice bullish engulfing candle here 2 weeks ago, which then put more emphasis to the upside, more positive buying sentiment coming through on this candle. And this candle over here with all the buying sentiment coming through, engulfing the past 1, 2, 3, 4, the prior month to that. So positiveness. But having said that, we saw a bit of both buying and selling the prior candle before we saw last week's candle. You can see both candles are indecisive, not making new highs, in fact, and we need to see that happening. So vitally important. In this particular case, we need to get out of this range, either side. Whether it's a continuation break to the downside, we know then where our first target is likely to be, and that would be the January 215 low. And between these 2 points, from the support to this level here, in excess of 559, let's make it 500 pips. Okay, at least 500 pips of profit to the downside if and when we get a nice juicy candle break low and everything to the downside. Having said that, if we don't see price making a new low and price actually breaking the current resistance level high, which also happens to be a price support and resistance level here at 94953, we get a break and close higher than this at the end of this week coming. That would then indicate that we are likely to see further bullish sentiment for the US dollar, and that would then open up gains to the upside. So if I'm just going to put my monthly pivots on this particular pair, there we go. Monthly pivots are drawn on. You can see the monthly pivot is below price. Good. We need to see that if it's positive. The candlesticks are all positive. Yes, we've not seen any new highs, but the candlesticks overall are still positive. So therefore it tells me that the bias is still US dollar strength positive. But having said that, we need to see a new high. We haven't seen one over the last 2 months or so. So it's indicative that we do see a close higher. But you can see that the monthly pivot R1 level is where I've drawn that support and resistance level. So let me take that away. You can see clearly that dotted blue line is where price needs to be above, which is in 0.95146. Get above that, and you can see that we have target levels to the upside. The first one will be to R2, which is about 180 odd pips away. Get above R2, then we can head towards that R3 level, which is about 172 pips before we can then tackle the January or December high levels for 2014 and the January high in 2015 as our last port of call, which is in excess of 245. So above us, a lot of opportunities to take profit, and vice versa to the downside. You see, monthly S2 level would be a fantastic one before we look to the downside. So here again, we need to see something happening. In this case, we need to see a break of the consolidation range that we've seen on the weekly time frame. Don't try and change or trade between the range. Far too aggressive, far too risky, a lot of volatility, guys, and a very tight range of that. So the risk goes up tenfold. Not worth doing. Rather be patient. There are other pairs there to trade. It's far better just to stand aside, give this to the market until we get a confirmational break lower or higher. And it's got to be a weekly closed lower higher, because we're looking at the weekly candles. We've seen some of these weeks trading higher and some of these weeks trading lower, but always closing within the range. Got to see a physical close. That's the most important part. So here, I think US dollar Swiss franc, let's give this next week to the market to give us a clear direction of where price is likely to go to for the month of August. And then happy days, we can make some money on that outcome. Last pair is going to be the US dollar Japanese yen. Okay, looking at the weekly here, you can clearly see that we've seen pullbacks for the US dollar against the yen as people have taken more opportunities to trade risk-averse positions, and we've seen prices pulling back because of that. A lot of spinning tops over the last 2 weeks in particular. Notice where price is trading. It's consolidating at the 2014 high, which is the November high of 2014, but also the resistance level high of February, March of 2015. So breakout. Now we're seeing a pullback. She needs to remain above this support and resistance level at 121.72 to then remain positive. Remember, we have a red arrow, but the candlesticks are still blue. Okay, if this was genuine selling sentiment bias, then we would see a red candle to comply with the arrow. We would need to see the RMO below the zero level, and we need to see the MACD below, which is clearly what it's doing right now. But we don't have that because the candlesticks are still blue and the RMO is still above the zero level. So clearly 2 against 2 cancels any trading at the moment now. So here, if this is to be a genuine bull candle, look to see if there's any positive US data that could come out this week that could actually push prices higher, or we're looking for Japanese yen negativity. What we do have is we have both. We have core retail figures, sales and sales for the US, which is on Tuesday, and they expect a contraction there, which is not really great. We also see retail sale month-to-month figures. There again, also contraction, not very good for the US market. Then going into Wednesday, we have the monetary policy statement. We have the Bank of Japan press conference. Those two figures very, very important. But also saying that, we also have China's GDP quarter and year figure. And here we're looking for contraction. We also have China's industrial production year-on-year figure. They are an industrial country. They like to, for China to be strong, they need to be exporting a lot of their goods that they make. So industrial production year-on-year needs to be stronger year-on-year to have a positive GDP, which will then give us a strong China. Here, they expect a contraction of 0.1%. So almost a like for like from the same time last year. So anything weaker than 6%, then we're looking at weakness for the Chinese market, which would have a ripple effect throughout the global economy. Looking at Wednesday too, we also have the PPI month-to-month figures for the US. Here again, contraction, not good for the US markets. What else do we have? We have the Fed Chairman Yellen testifying on Wednesday. So Wednesday is got quite a lot of data out for the US market. So there again, we need to see positive US data to see a confirmation of bounce. If we don't get a bounce and we see price breaking below this 121.72, that puts more negativity on US dollar against the yen, which would then put more pressure for price to drop more aggressively, at least towards the 2015 lows that we saw here in January, roughly around that 50-period moving average level of 116. And you're looking in excess of, between these 2 points, about 460 odd pips between it. But you can see, if we see a break low and close low, we're trading back within this consolidative range. And it's been a very, very untidy range over the last number of months. Is it worth trading? Not particularly. Would I like to be either trading higher? In this case, we are trading higher, but it's imperative that we hang on to those support and resistance level highs that she's trading at currently at 121. She gets back between that range, it doesn't look all that good for the US dollar. So here, very, very important that you look at the fundamentals for this week to see if any of that sentiment that comes out is going to drive the US dollar higher. On paper, it is strong. Having said that, we've seen a slight contraction within the US market. We have seen a contraction on employment figures. We've seen a contraction on manufacturing. We've seen a contraction. It's not really, really good. We want to see those figures getting stronger for the US market because they pumped a lot of QE into their program. Now, the last thing we want to see is that all coming to a sticky end. So vitally important. We need positive US data this week to push those prices higher on the breakout support resistance level here at 121. Hammer, now we need to see building. So when I say building, look at last week's high. So we look at Friday, Thursday, Wednesday, Tuesday, Monday. So take the Monday high. You can see Sunday was lower. Get anywhere above that 20-period moving average, above at least this level here. Let's just go and use that. At 122.90, draw support and resistance level above there. Look for a daily close. Look to see an arrow with a candlestick changing color to confirm that there's genuine sentiment. You can see the intermediate trend is to the downside. So clearly, intermediate swing low, swing low. You need to see a breach of that to see a continuation to the upside. If we do get that, then we can start applying our pivots. Let's do that. There we go. Monthly pivot on. And you can see the monthly pivot is still above price, which is a negative sign. We want to see price above the monthly pivot at least to tell us we're still very much on a positive uptrend. That's clearly not the case as prices drop below that level. So vitally important that US we see the US dollar trading above that as soon as possible. And if we do get that, then we can see that price can actually move towards the monthly R1 level, which is in excess of 145 pips from the 123 mark. Okay, very, very important. So we've got to put that adhere to those levels. Once we get into that level or above those levels, especially the monthly pivot, you can see we can trade cleaner air. Okay, vitally important. So look for those fundamentals to back up the picture that you're painting on your chart. Greece, the summit, economic summit tomorrow. Look at the fundamentals. Let's wait and see what happens in Greece. I think once we get Greece out the way, then you'll start to see a lot more movement or direction within the currency markets. I hope you have a fantastic trading week ahead. Until then, you guys trade serenely.